Good afternoon, everybody, and welcome to another what should be interesting and exciting fireside chat. I'm joined this afternoon by Kevin Ford. He's the CEO of Calian Group. By way of introduction, I will be the moderator today. My name is Nick Agostino. I'm the Diversified Technology Analyst here at Laurentian Bank Securities. Before we kick off the discussion, just want to remind everybody for all the attendees, keep your microphone on mute and make sure your camera is turned off during the session. Please ensure your name appears on screen so we can properly address any questions you may have. And when it comes to questions, feel free to use either the hand feature or submit your question through the chat, and we'll get to that question as soon as we can. And then lastly, questions will be moderated by my colleague, Jordan Simon, who is also handling any technical issues that may arise. With that, I will get this fireside chat discussion started. So Kevin, welcome and thank you for joining us today.
Thanks, Nick. I appreciate it. And again, always happy to have an opportunity to talk about the company and questions. So again, really appreciate your time as well.
Thank you. So first question from our end is your business. It's obviously diversified amongst what we consider booming sectors. Obviously, you've got IT, cyber solutions in there. You've got learning, you've got healthcare, and you've got the advanced technology segment. So when we look at your stock, it's obviously been well rewarded through this volatility period. And when you compare it to other technology names, you guys stand out on the positive side of things. So congratulations on that.
Thank you.
So given the market trends in these segments, how do you guys look to position the company to grab further market share? So maybe discuss each segment specifically.
Great question. I think, before we look forward, it's important to look back. And if you look at the last, 2 years of over 20% growth for Calian, profitable growth, and with our current guidance, another 20% growth here. So it's important that when you look at the company, that what we've been doing is we got to keep doing, and that growing that 20%, growing profitably for sure. Our 4-pillar framework that we apply to each of our business units of customer diversification, customer retention, innovation, and continuous improvement is a simple but effective strategy. And everything we're doing right now to support and grab further market share is all around that, diversifying our customer base, innovating, continue to innovate within each of the segments to ensure that we're addressing not just today's needs, but the future needs of our customers. With regard to each segment, for advanced technologies, we continue to be a global leader in SATCOM, and everything that flies in space, we can do all the ground infrastructure for it. We've continued to expand our antenna base. We now have everything from 10-meter antennas to antennas the size of your hand for GNSS and precision location. So if you're in a restaurant with our antenna business, you got a full suite of antennas and different communication capabilities for both legacy and new networks. We continue to do advanced manufacturing for aerospace and defense. And as you see with recent expenditures in defense, we expect some tailwinds there for sure. And as I go through each of the segments, our learning is about diversification. Right now, our European presence that we put in a year and a half ago is supporting European military. We just won a major NATO contract. So we will continue to diversify within our learning business and likely more in defense. In our IT business and cyber, what can I say, right? At the end of the day, we continue to have more customers hitting our website, hitting our discussions every day with regard to new capabilities in cyber. We expect that to continue to grow. And our healthcare business will be a mix of we're doing work we do today, but also expanding our patient support programs and contract research organizations outside of Canada. So diversification, innovation across all that we do, and both M&A and organic growth in each segment is how we want to continue to keep the tailwinds that you've been seeing in the company for the last couple of years.
Okay, so obviously the diversification is certainly a key theme for the company, but then that also comes with the risk of overextension of the resources and certainly a potential reduction in innovation. So what are your thoughts on this as to whether that is the case, that you're, how do you manage, I guess, resources and not overextending yourself? And then at the same time, when you look at the level of diversification, you look at the health of of all your segments, has been any thought to maybe spinning off a couple of the divisions within the organization? I'm thinking about IT and certainly healthcare as two possible segments. And then maybe, or maybe the opposite is true, that they bring so many cross-selling features and benefits that you are more than happy to keep all four pillars intact. So just talk to how you see diversification helping you create shareholder value, how you manage that to make sure that resources aren't extended, and then the idea of, is four pillars giving you a lot of cross-selling benefit as opposed to maybe spinning off some of those groups?
Yeah, it's a great question. I think for me, what I love about the company right now is an investor can invest in one company and get access to four very distinct segments. One of our shareholders talked about Calian being a portfolio of companies, and I love that phrasing. You invest in one company, you get access to advanced tech, healthcare, learning, and IT and cyber marketplaces, domestic, global customers. You get, we just celebrated 80 consecutive profitable quarters, 20 years of profitable execution. You bring the 1.3 billion of contract backlog we have in, we pay dividends, we have a very clean balance sheet, we've deployed capital, both in M&A and organic. So the fundamental characteristics of Calian, I think as people, as you said, do their homework with regard to those four segments, I think is very exciting. So I love that. I think that differentiates us in the marketplace because of that diversification and the ability for shareholders to get in on four very distinct segments, number one. So definitely, I think that's a value to the shareholders. On the innovation piece, I appreciate, you got to be careful when you're diverse that you don't lose sight on innovation. From my viewpoint, I've created a CTO for the first time in company history, a CTO office, Chief Technology Office, and basically their job is that innovation playbook. Like we've done on M&A a few years ago, creating an M&A playbook, we've created an innovation playbook. And really, it's not about reduction in innovation. How do we do more innovation? How do we actually bring out the innovation that exists in the company across the 5,000 people at Calian, both in our domestic and global footprints, and move more towards technology-focused delivery? And we're doing that again organically and through M&A. And in the short term, your question's a great one. I do see the synergies cross business unit. For example, cyber runs across everything that we do. Cyber and SATCOM, cyber and healthcare, cyber and learning, due to resiliency training. So we're starting to see now that we have more and more items on our truck, if I can say it that way. We're seeing those cross-selling opportunities where we can go talk to a customer. If I'm the CEO of a hospital, I can go talk to them about virtual care platforms, our virtual care platform. I can talk to them about healthcare practitioners. I can talk to him or her about the cyber capabilities. I can talk about data integration with our DataSoft capabilities. So if you divorce how we're organized to a customer and just present all the capabilities, it's becoming very substantial and I think very much differentiated for Calian going forward. So I like the four-piston engine. I believe right now, Nick, it's going to help us grow to, we've crossed 400, 500, and our current guidance is 600 million this year. And our drive to $1 billion, I think leveraging that four-piston engine is still the right thing to go. Maybe at $1 billion, you take a step back and you're looking to see if that's still the right strategy. But right now, it's all hands on deck to get to that $1 billion, leveraging this four-piston engine at Calian Group.
Okay, that's a very thorough response. Next question is, given the current geopolitical environment that we're living in, obviously with Russia and Ukraine and the tensions associated with that, there's obviously been a lot of talk in the news media around cyber attacks that have gone up, by multiples, or at least the risk of. And I'm just wondering, within your IT and cyber solution segment, have you seen, I guess, strong demand or people coming to you as a result of the heightened levels of risk, where you've got a nice tailwind on your cybersecurity solutions? And I'm thinking of Juno 360 in particular, and then maybe, given the political climate geopolitical climate that we live in, what other trends are you seeing that I think are positive catalysts for your business? I got to think that obviously NATO and you announced a nice contract earlier this week. I think it was a 5-year, $15 million deal, right? With
Correct.
3 years every year with options. I wasn't surprised to see that announcement, given the talk of more spending on the part of NATO. So maybe just given the learning platforms you've added, the geopolitical environment, maybe talk to, and your relationship with NATO, talk to us about the benefits on the cyber solutions side and maybe the benefits that you see on the learning side as a result of this geopolitical climate.
Yeah, it's, prior to Ukraine and the situation, and again, our thoughts and prayers to the people of Ukraine. Prior to Ukraine, we were seeing, if you kind of unwind about 18 months, we had bought Dapasoft with iSecurity in Toronto and basically brought, strengthened our Canadian presence in cyber. And even with that, prior to Ukraine, we have customers waiting to onboard right now onto our managed services capability, just from a domestic perspective from Canada. We've just closed the acquisition of Computex, which now gives us a US presence in our IT and cyber business, another 75 million in revenue, and increases our recurring revenue in that segment to 35-40 million with regard to IT services and cyber. So we were feeling, prior to Ukraine, considerable demand on cyber, and was trying to position both strengthening our position in Canada, but geographically targeting the US, hence the Computex acquisition, which brings us over 1,100 new logos, small, medium enterprise. So we're excited by that. So I think what Ukraine has done, it's shone the light on two things. Number one, it's for defense organizations, the requirement that the world can change in a day. The world can change in an hour. And not investing in defense is something that, unfortunately, in today's world, you just can't consider. And I know I was waiting to hear the federal government's announcement here in Canada today. They're expecting increase in defense spending. You're seeing countries around the world, in Europe, NATO countries talking about increasing defense spending. So it's really highlighted the fact that you can't just turn on and off defense. You've got to be able to continue to fund it, make sure it's ready, whether it's a wartime issue, a fire, a flood, a disaster. The reality is, unfortunately, those things continue to increase, and we got to have defense forces ready. So that's number one. Number two is the cyber piece, to your point, is that, again, you've got the ground war and you've got the cyber war, and you've got to be able to be able to fight on, frankly, both tiers. So for your question, we saw increase in cyber even prior to Ukraine, and hence a lot of our focus and capital deployment in that area, both organically and through M&A. And with now the increase in defense spending, a year and a half ago, 2 years ago, we made the conscious decision to put a flag in Europe, buying 2 companies there to give us access to NATO. And as you said, very proud now that we've got that defense, the NATO learning contract, 15 million over 4 or 5 years, and now also have beachheads in about 4 or 5 other European countries, thinking that we're going to see massive learning opportunities here, but we got to walk before we run. So long answer to your question, cyber, absolutely. We're going to continue to see growth, and then learning and increase in defense spending. We also believe that will be a tailwind, and we're uniquely positioned to capture both because we're frankly got a presence in Europe and we got the strong presence in Canada. So we're ready to go on both fronts.
Okay, I appreciate that response. Focusing more on, or continue to focus on that whole IT and cyber solution segment. Obviously, there's the opportunities to grow through organic growth, as you've kind of just alluded to. And I'm just wondering, is there, given the market demand, is this maybe shifting your thoughts when it comes to M&A and placing, maybe looking at placing more emphasis on acquiring cybersecurity type assets? And if so, is that already in your pipeline? Do you have any prospects on that front? And also just on the M&A front in general, what other areas are you looking at? And I asked that question because I recall last year at, I think it was at your AGM in 2021, you spoke about a transformative acquisition as we go into 2023. And I'm just wondering, is that transformative acquisition still on the, on the table? And assuming that it is it part of that $1 billion revenue target? And just given all the pieces that are moving, any idea 1 year later what that transformative acquisition might look like in terms of what segments?
Yeah, no, again, great question. I think if you look at the IT and cyber, maybe I'll start there. We want to continue to grow in IT and cyber with organic and M&A. I've asked my business unit presidents to ensure they're presenting strategies to me that do both. And I think that's important. We need to continue to innovate what we do today and make sure it's relevant and make sure that we're leading the pack, whether it's in training and IT and healthcare and advanced technology. So we never want to lose sight of, we have a lot of capability today, and I don't want to see us become old news. I want us to continue to lead the pack in everything that we do. So that's the organic engine, and no CEO spent more in R&D than I have. The M&A should support our strategy. It should be able to and M&A generally supports two elements of our growth strategy: customer diversification and innovation. And if you think about Computex that we just closed, we diversified into the US, and we brought a whole innovation truckload of new assets with regard to a managed security capability, network security capability that we didn't have on the truck. Perfect acquisition for us at the right price point. So for IT and cyber, we will continue to go with M&A or an organic. And on the transformative acquisition piece, if you actually think about the last, again, 12 months at Calian, 12 to 13 months, we've bought iSecurity Dapasoft, and that's a potentially an $80 million transaction if earnouts are made. We go ahead and buy Computex, which was an asset deal, so all cash up front. So we've deployed in the IT cyber segment over $100 million in the last 18 months alone. So I believe by definition, that's transformative for IT and cyber business, because we've basically tripled our business there. We've improved our margin and introduced quite a significant amount of recurring revenue. So the transformative piece, I think we're going to see each business unit have that type of moment. The acquisition of SimFront SimWave in our learning segment, it wasn't huge from a revenue perspective, but it's transforming our training delivery. Now we have technology assets we can bring the customer around virtual reality, on immersive learning, on basically bringing technology into your learning scenarios. So it wasn't transformative in the sense of the size and scope, I think the normal definition of transformative, but it's transforming how we talk to our customers, because now we can bring a great services arm and technology assets. So as I look to $1 billion, I think there will be more of those type of transformative acquisitions. I think likely it will come in the shape of a transformative acquisition in each of the segments versus betting the company on one big acquisition. I think our shareholders have given me that feedback that they like the M&A, but they hate to see us kind of bet the farm on a large thing that fails, considering our track record. So if we can deploy $100 million for example, in each of our business segments, and grow to $1 billion, it's probably, number one, less risky. Number two, more manageable with regard to our ability to integrate. And number three, will allow us to focus to make sure that we get the right type of company into the Calian family. And I think that's how you're going to see us progress, move into $1 billion, Nick. It's a combination of numerous, $150 to $100 million type acquisitions, transforming how we actually operate like we've done with our IT business. I do believe right now, your point on the cross-selling opportunities, that's going to be another driver. And as well, just having more scalable assets on the truck with regard to revenue models and technology will improve our margins. And it's going to also increase our differentiation as we look at the global marketplace. So I love our strategy. I love our 4-piston engine. I love the fact we're looking at M&A and organic. And I do believe in each of our segments, we have opportunities to grow both domestically and globally. So I go to bed every night figuring out how we leverage that and work with our business unit presidents to do exactly that.
So it sounds like we've seen the playbook over the last year, and over the next 2-3 years, we're going to see a similar playbook just applied to the different pillars over the course of time.
That's a great way to phrase it, maybe every time I use it, I'll send you a quarter, Nick, and how you actually summarize that with regards to operating, how you did that. But I think to me, that's exactly right. I'm not, we've never been a company that wants to be that hype. We are a company that's growing profitably. We've had 20% growth the last 2 years. We're projecting 20% growth this year profitably. We're increasing our margins. And I think for the right type of shareholder, that's of interest, because again, you get the access to the 4 segments, you get the built-in stability that creates. If one piston has issues, you still have 3 pistons to drive the company. And I think that's starting to resonate in today's volatile world. And initially it was COVID, now we have Ukraine, and what's next here. And the good news is everything we're doing as well is relevant. It's, we have not slowed down in any of this period over the last 2 years. Everything we've been doing is relevant, and customers are asking us for more during some of the most trying global periods that we've had in 100 years.
Okay. Just turning, I guess, to the advanced tech side of the business. I think it was recently, we see the transactions that you're doing on the safety services, military solutions. Satellite has obviously been been a key piece there. But then on the recent Investor Day back in February, you talked about adding more software-defined pieces of business within that segment. So if you can maybe give us some color as to where you see the software component tying in. And then if we were to look out 3, 4, even 5 years, obviously software is a much bigger margin business. Where do you see your advanced tech margins going from as you incorporate more and more software? I mean, today I feel like they're in that 14 to 15% range. What should we be thinking if we look out 4 or 5 years?
Yeah, great question. And what I was referring to in our AGM is we have within our advanced technologies group, I think a lot of times, when people look at Calian, they obviously see our large ground-based antennas or our smaller antennas, and those are a key part of what we do. But we don't talk enough about our software solutions, which is basically things that we do just with software. And these are in-orbit test systems. These are things that are basically, the SiriusXM solution that we have is pretty well a software solution. It's not hardware floating around. It's actually software managing interfaces to satellites, managing communications protocols, testing satellites in orbit. So we believe, and that group continues to grow. And there's just not enough software engineers right now. And I think a lot of my counterparts that were speaking today, I'm sure would say the same. So what we're expecting is a combination of advanced technologies. So more and more projects with regard to implementations. We have our own communication products. So we actually go to market with a wide array of communication products that customers buy to optimize their satellite networks. And then the software-defined solutions, which is now actually being that glue that holds a lot of that infrastructure together, we're seeing very substantial growth in all three, frankly. But the software-defined solutions, to your point, higher margin, and should do as long as we continue to grow there, we're going to see advanced tech margins continue to increase. Not only because of software-defined solutions, frankly, but if you look at our GNSS antennas, you look at different elements, we're in a high margin opportunity areas because they're in such in demand. And I think if we execute our strategy across those three, our RF projects, communication projects, our products, and things like our GNSS antennas, and continue to grow our software capability, our advanced tech group will continue to grow both top and bottom line.
So it sounds like it's not so much adding products there, it's a favorable shift in the revenue mix.
A shift in the revenue mix and continuing to focus. The way I look at our business, people almost ask me a lot of times, how do I deploy capital? In a diverse company, Kevin, you've got, as I tell people, I have 4 kids at home, I have 4 kids at the office. How do you deploy capital? And, we try to, I'm a very simple guy. I like a visual. I have a 4-quadrant chart. In the top right quadrant is high margin, high growth opportunities. And those are our products or our capability that have demonstrated the ability to continue to grow and grow profitably. So from my viewpoint, I don't know if the screen got dark, if that's just me, but hopefully you can still see me. So the goal is right now is on advanced tech, IT, learning, and healthcare, is we want to continue to focus on that upper right quadrant with regard to the high margin, high growth opportunities, make sure we're prioritizing capital deployment into those areas, supporting the other things that we do. They're all important. But to grow to $1 billion, to grow past $1 billion, we're going to have to make sure those high margin opportunities, high growth opportunities are fed and watered. So we try to take a very pragmatic approach to this to make sure that we're focused on those areas. We still definitely invest in other areas, figure out how we move more into that quadrant. And we have quite a bit on the truck right now. So it's an interesting dialogue every day between myself, CFO, and the business unit presidents on where we focus. But we have a great strategy, I think, to do exactly that. And as long as we're executing our strategy, margins will increase, both our gross margins, EBITDA margins, and revenues that come along with a growth company.
Okay. And then I'm going to squeeze one more question in. And it's similar along the lines of that revenue mix shift from a software perspective on the advanced tech. On the healthcare side, it sounds like you're looking to do a similar digital shift. You spoke about, again, on the Investor Day, pushing through more products like I think it was called Corolar, your Nexi, Panorama, and a Rexalti, just looking at my notes here. And I know that some of these are in a telehealth space. So I'm just wondering, can you speak to the cross-sell that you've gained within healthcare, not from a services side, but from a technology perspective? The margin influence, and just the overall market reception when it comes to these digital applications you're introducing in healthcare.
Yeah, our healthcare journey started, the one thing that we have that a lot of organizations that are pure play tech companies don't have, we have the practitioners. We started our healthcare journey with the practitioners. We probably have one of the largest national healthcare network in the country, based on the fact the work we do supporting the military across 32 bases, 80 different categories of folks, whether it's doctors, nurses, dentists, psychological, mental health support. So we started there. And what we've been doing is exposing that network to other customers. So we now have nurses in Nunavut, we have oil and gas, we have other provincial and federal customers. But what we've been doing, like we're doing in all our segments, is acquiring and building more technology assets. So today in our healthcare portfolio, we have a virtual care platform that we go to market with Microsoft. It's available now in the Microsoft Azure Marketplace. People can download it. It's an as-a-service model that allows people, if you have an organization, a hospital that's using Microsoft Teams as a Microsoft backbone, we could actually now plug in a whole virtual care platform in for them and have it integrate into their Teams environment. So Microsoft is excited about this. We're excited by it. And again, that didn't happen, a year ago. And here we are today with a Microsoft integrated platform. Our Nexi platform gives people the same type of capability who don't have Microsoft Teams, but it gives them a whole scale of other capabilities as well with regard to managing the patient interface, the patient data. So if I go back to what I said earlier, if you're the leader of a healthcare institution, I can go in and talk about what is your pain point. Do you need virtual care? Do you need to optimize that with your desktop? Do you need to integrate your data? Do you have a cyber challenge? Do you have a practitioner capacity challenge? We're able to now really have a full menu of healthcare capability discussions with our customers that 2 years ago we didn't have. And now you bring in the Computex acquisition, 25% of the revenues in the healthcare sector in the US. And right now it's an IT discussion. So how about we go talk to those 25% healthcare customers with regard to what about all these other things we have in the truck now for healthcare integration, virtual care, Microsoft relationship. That's what I'm excited about is not just the evolution within the healthcare business unit, but now the cross-sell opportunities into things like into customers, frankly, like our Computex acquisition is going to provide that opportunity to do.
Well, it certainly sounds like diversification is driving some exciting times at Calian. So I do appreciate all that color. That does conclude our fireside chat. Kevin, I do appreciate your time, and always a pleasure to chat with you. To our attendees, I do want to thank you for joining us today. Hopefully you found this session to be insightful. And then just a reminder to everybody that we'll have our next presentation begins at 3:50, and that is a fireside chat with Sylogist. So Kevin, thanks again.
Thank you so much, and I can really appreciate the questions, and thanks for everyone who listened in.